please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, you're with us here on a fresh new edition of Midcap Radar. It's good to report that the market is at the day's high, almost at the day's high as we begin this edition, 130. 150 points on the Sensex, about 40 points on the Nifty is where we are at. So essentially on the Nifty, we're about 40 points off the lows of the day. Pharma, PSU banks and IT still remain as the top gainers. The gains are not more or less, they are in that between 1 to 1.8% range. Pharma, of course, leads the gains. Ek tha aapno.
Hi Prashant, yes, absolutely. And for the Midcap index itself is above 19,000 as we speak. And the advanced decline ratio could be asking for a little more right now. It is in positive terrain, but it looks like it's a bit of a struggle to maintain that advanced decline ratio at this point. So just wait and see how it pans out for the remaining part of the session and whether or not there's any sort of crisscross. But as of now, we have a whole set of stocks to reckon with in the next 30 minutes. Let's start with the top stories. Another day of gains on Dalal Street. The Sensex and the Nifty trade near the day's high, led by Infosys, TCS and private banking stocks. S. Narain of ICICI Pru bets big on pharma stocks, sees a 20 to 30-year mega trend in healthcare and diagnostics.
Pharmaceutical stocks continue their move higher, and this is essentially what, the fifth or sixth day that we've seen that. Dr. Reddy's and Cipla gain over 3% apiece. Sun Pharma gets an additional boost after the US FDA gives an EIR to its Halol plant.
TCS is amongst the top Nifty gainers on news that the tech major will mull its second share buyback on June 15th. Tech M is in focus after the management tells CNBC TV18 the restructuring drag on their telecom portfolio is behind them.
Page Industries hits a life high after the company extended its licensing agreement with Jockey till 2040. The company expects steady growth to continue across all segments, reiterates the 20% revenue growth target for the next many years. That is a CNBC TV18 exclusive.
Asian markets closed lower. Investors shift focus from the recently concluded US-North Korea summit to the Fed Reserve June meeting outcome later tonight. A 25 basis points hike in rates is widely expected.
All right, let's bring in Ashwani then, who's with us. Ashwani, thanks very much. 10,882 on the Nifty. Your thoughts right now, and what would you trade?
The market is still positive, and overall there is good sector rotation. Hence, if one sector comes off, another puts up its hand. So that way, still buy as long as we stay above 10,850. For the moment, ICICI Pru looks like that's hit its 200-day moving average, and it's a down stock today, but with a 404, 405 type of stop, I think you can get 417 to about 420. These are the kind of stocks you have to buy because the levels are fairly high, and here the supports are fairly close by. Having said that, other stocks, Delta Corp again, one stock that has had a big correction. It seems to be bottoming now, so that's a buy with a stop of 236, target of 252. I would think even a longer term bottom is getting into place here. Cement, I have said that it's ready to bottom out for several days. So Ultratech is a buy with a stop of 3800, target of 3920. And Titan is coming off of a sharp correction. That is a buy with a stop of 910, target of 945.
Okay, well, we had some updates coming in from OPEC, so maybe we should just pull up, or rather the International Energy Association.
Energy Agency, IEA. So they're basically putting out...
global demand is expected to be flat, but non-OPEC supply is supposed to be higher.
Actually, the figures, we can actually I guess there'll be a commentary on this, etc. But broadly speaking, the problem has not been, the reason behind the spike in oil has not really been great growth in oil demand. It is on the issues on the supply side, which have been the problem. And we're getting some supply growth numbers as well from OPEC, but we'll need to get an expert to put those numbers in perspective. I mean, oil's come a long way off, not a very long way off, I guess.
And high was 79.
Yeah. I mean, WTI is now 65. It was under 66, Brent at about 75. So it has come off the highs. Yeah.
Okay, so remember that there is that OPEC meet which is going to be taking place on the 22nd of June as well. So that will be important to watch out for. But nonetheless, Ashwani, just talking about oil stocks, what would your call be on oil marketing companies? Okay, I think we've lost Ashwani on that note, but in any case, we got his picks and his strategy on the Nifty. For the Nifty, in fact, it's holding with a gain of around 0.4%. We'll do one thing, we'll take a break, or is Ashwani back with us? Okay, instead of that, we'll get you some perspective on the markets. S. Narain of ICICI Pru, he's quite bullish on the pharma space. Let's listen in to what he had to say.
We are positive on earnings. And because we are positive on earnings and earnings primarily coming from some of the large caps, I would say that we are clearly more positive on large caps over mid caps and small caps over the next few years. We continue to think that mid caps are relatively overvalued compared to large caps. See, the entire mega trend which played out, which is commodity price coming down and interest rates coming down, they help the mid caps and small caps. Now commodity prices are going up and interest rates are going up, which actually benefits the large caps. So we are still clear believers in this large cap trade over mid cap and small cap. We think it's one of the big mega trends that I can think of for the next 20-30 years. The advantage in this theme has been the fact that over the last 3 years, it's been one of the biggest dogs as a sector and it hasn't done well. So you get a rare opportunity of a very good long-term mega trend along with bad underperformance in the last 3 years, giving you a good entry point, except in the last 2-3 days, I think the sector has been continuously underperforming. The valuations are also attractive, and the other advantage with the fund is there are individual stocks with individual risks. Our view is that as long as you have a long-term view, the short-term pricing phenomenon that you see periodically in that sector is something not to be worried about, because at the end of the day, we are more dependent on our mobile phone today than 1 year back. We do more things with our mobile phone today than we did 1 year back. So I don't think there is any problem from a long-term angle. We feel that the sector is a big positive over the next 3 to 5 years.
Okay, so S. Narain, sort of in a way, a longish kind of sort of call coming in. One of the big mega trends you can see, pharma, and to boot to that, he says prices are attractive. 40 points on the Nifty, so right there where we started the show. We take a very quick break here. Up next, we will speak with one of the top housing finance companies, Indiabulls Housing. Management will be joining in just a bit. We'll discuss, I mean, of course, what happened late last evening, which is the government essentially giving a further boost to the interest subvention scheme for housing loans. And of course, also the business environment. Gagan Banga, Vice Chairman, Managing Director, Indiabulls Housing Finance, coming right up.
Welcome back. You're still tuned into Midcap Radar on CNBC TV18. Well, in a boost for affordable housing, the government has increased the carpet area under the PM's Awas Yojana scheme. To discuss this, we have with us Gagan Banga of Indiabulls Housing Finance, as well as to discuss the industry and the company outlook. Gagan, hi. Thank you very much for joining in. So let's start with how, this extension which is provided under MIG-1 and MIG-2 would be beneficial for a company such as yours.
Yes, so the scheme in general has been reasonably well taken. So about close to about 20% of our home loan borrowers have been availing the scheme. And to the government's and National Housing Bank's credit, even the speed of disbursal of the subsidy has been, after the initial hiccups, has now streamlined. I believe that this particular initiative of the government should increase the penetration by another 25% and take it in the range of 25 to 30%. So what used to be 20% of the borrowers now about 25 to 30% of the borrowers will start qualifying. And this will be seeing a major impact in Tier 2 and Tier 3 cities. If we are to think about what the Reserve Bank of India also did in the credit policy last week, which was to extend the priority sector guidelines upwards, I think housing finance companies, as a consequence, will get more capital through the securitization process. And that capital can then be funneled into a greater demand for such housing. Specifically from an Indiabulls housing point of view, we run a program called the Smart City program, where we are getting into 100 new Tier 2, Tier 3, Tier 4 cities. So this comes well in time and will complement the larger strategy that we have.
Okay. So Gagan, in your opinion, you expect the loan growth to continue at the rate that you've seen even in the previous quarter? I think last quarter your credit growth was at a 7-quarter high.
Yeah, so from specific to Indiabulls housing, loan demand is actually quite strong. There have been a couple of rate hikes which have happened. This subsidy program continues to be a counterbalance to those rate hikes. At a broader level, what one is seeing is, which I had mentioned in our last interaction also, is that across the board now there is much stronger momentum. So, even apartments which are north of 1 crore are seeing a reasonable momentum come back after 3-4 years of lull. So from a book growth point of view, the book should be growing well north of 30% as we saw in fiscal 18.
Gagan, hi, afternoon, Prashant. So just on that point, how are you going to deal with the interest rate cycle seemingly turning upwards a little bit? Would it affect spreads? That is one. And second, at some point it will start to feed through into EMIs rising. Will that impact loan demand?
When rates rise, housing finance companies over an extended period of time have demonstrated that they are largely pass-through vehicles. So what we saw, we'll just go back in time to put this in context. In 2010, and along with the advent of base rate regime, home loans were offered at 8%. By 2013, home loans were being offered at 10.75%. And then it gradually came down to, by 2016, it was 9.5%. 2017, it was 8.5% to 9%, and so on. So we have seen over the last 8 years a range of 8% going as high as 10.75%. And the mortgage industry broadly kept compounding in high teens. The mid-income group kept compounding well north of 20%. So there will be a pass-through which housing finance companies will have to make. This is a tight spread product. As long as there is no big gap between what the effective mortgage rate is net of the tax rate, and now for the last year and a half net of this subsidy, and the rental yields in the country, the demand tends to stay strong. Right now, that gap, even if somebody is not taking the subsidy, would be practically the same. So you pay the same for staying in a rented house as you pay for taking a loan. So demand should at least be able to absorb another 100-150 basis points of increase from here, basis this convergence of rental yields and home loan effective home loan rates net of the tax break which one gets. As far as EMIs is concerned, generally speaking, the market norm is that the EMI only gets increased as a last resort once the borrower hits a certain age limit that each lender has, or there is negative amortization which starts, which in the initial 20, 30, 50 basis points of increase generally does not happen. Last time when the increase was well north of 200 basis points, only then did such cases have start. So EMI increase is not something that one is going to see in the short term. What we will see is only if interest rates are to rise beyond 100-150 basis points, some impact on demand. But this policy and this extension will be a massive counterbalance to the whole piece.
Fair enough. It's an interesting way to look at it. Policy being a buffer against the rise in rates. So you're saying that another 100, 150 basis points increase in rates, demand is strong enough to sort of take that in. Are you anticipating that much increase? I mean, between 100 and 150 basis points over the next year or so? And second, I think in April you increased rates by between 20 and 40 basis points. Have you seen any change post that?
Yeah, so the April change was followed by another 10 and 20 basis points change for home loan and other customers in June. So as I said, we are essentially a pass-through, and as bond yields have moved, we've had to increase rates in line with what the industry has been doing. And our endeavor would be that we will continue to leverage on our various strengths, including ratings, and make sure that our product is the best priced product in the market. But we will continue with this pass-through. As far as the other question on rates is concerned, it will be like, crystal ball gazing. I don't know where oil will eventually settle or where the rupee will go and what Fed will do. So we will have to just see that whole macro play out. But clearly, where growth is and where the macro is, we are in some sort of a rising interest rate scenario.
Okay. Having said that, Gagan, your gross NPAs haven't really been a problem for quarters now. It's always between 0.7 to say 0.8, 0.9%. But given the fact that cost of funds is increasing, plus there is increasing competition because PSL norms have eased a little bit, and it is brought up by the RBI in terms of the lower ticket affordable housing loans probably becoming an NPA problem. Do you envisage maybe gross NPAs rising in the coming quarters?
So, Indiabulls Housing, for the way that we have evolved, has been a very, as far as the home loan product is concerned, has been a very focused play between, and we focused on loans between 15 and 30 lakh of rupees, more specifically between 20 and 25 lakh of rupees. So that's how narrow the range is. And through the periods of, smaller ticket loans becoming very popular, we have stayed away from that segment, as we have stayed away from the premium and the super premium segment for our own limitations, as well as a strong belief that the largest market is the mid-income group market, which requires a certain distribution focus, and we've preserved our energies focusing on that segment. Gross NPAs, etc., should not really get driven by increasing cost of funds. As I mentioned, EMIs and therefore the monthly payout that a borrower has to do generally increases only after about 200 basis points of pass-through in rates. We are far away. Otherwise, the tenor of the loan keeps increasing. Now, as far as the other, this priority sector norm getting changed, etc., is concerned, a very interesting data point is that while housing finance companies today have about 41% of stock of loans, they have almost 55% of flow of loans. So the market share is actually going up for housing finance companies. This is despite the fact that in the last 3 years, banks have shown a single-digit kind of credit growth. This product is a very last-mile delivery product where last-mile credit needs to be delivered, and housing finance companies have their own strength. So just because priority sector norms have changed, I don't anticipate increased competition. I do anticipate that the securitization market would increase, and thankfully the government at the right time has also clarified that there is no GST which will get levied on securitization. So that should clearly propel. We are seeing some challenges as far as Ind AS is concerned, but I think that those would also get sorted out.
Gagan, just one last question, and briefly, if you can, are you seeing a noticeable, meaningful change and boost for private players like you, because the public sector and so many of these public sector banks in all segments, including housing finance, are now pretty much shut out of the market?
Yes, so both across our home loan product as well as the product that we have for SMEs, where we give them secured loans against their homes, both the products are seeing a much higher demand, and clearly that a large part of the public sector banking system is shut today is facilitating at least by 200-300 basis points enhanced growth coming there.
Okay. All right, Gagan, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that is India Bulls Housing Finance. Need to take a break now, but more on the markets once we're backstage.
Okay, 37 points on the Nifty, 10,879. So exactly index where we started. I mean, stocks like Delta, Corp are moving big time, and it'll come up on your screen. Yeah, 9.5%. I think Delta was a buy call from Ashwani also. He said that it looked like after the sharp fall, it's kind of bottoming out. And then there are, I mean, names like PC Jeweler, which should come up. It's about 8% higher. You know, the pharma index and pharma stocks have been doing well. Cadera Health comes to mind. It's almost $400, 4.5% higher. And then you look at something like a Kaveri Seeds, which is showing some 5.5% gain at about 560 rupees. That's the one I'm talking about. And that's a sharp spike coming in the last, 10-15 minutes or so. It's a wrap here on this edition of Midcap Radar. Stay tuned. Your stocks follows right up.